do you value it? David, you know some of these companies, like Tesla. How do you value it?
I don't know. When it comes to Tesla, I don't know. Let's do a DCF valuation, assuming 15 million units in 2040. And therefore, after that, we have Tesla entering perpetuity growth of 2.5%. That's Goldman Sachs' estimate of how you analyze and try and assess the value of Tesla. And that's how they get to that 780 price target from 455.
You feel his pain?
Yeah, he downgraded the stock in June. By the way, you can't blame anybody for downgrading, and when it comes to Tesla, I don't think it was. But it's been up 192% since the downgrade versus the S&P up 22%, which, by the way, has been pretty darn good. That's since the middle of June when Goldman made the mistake of downgrading Tesla, only to upgrade it today on better long-term sales outlook and margin expansion. Jim, their EV adoption case scenario keeps going up. They call for 26% global EV adoption by 2030, 40% in 2035.
I know. I mean, it's painful because then he had to stretch it to the EV, more adoption, the battery, the margins getting better.
And then also full autonomous.
Yeah, but wouldn't it have been
5.
better to just say, listen, he did say that I got it wrong. That was, I mean, it is a mea culpa piece.
Yeah.
But at the same time, I think that what the people who read it make judgments about his credibility going forward because, David, there were finances, including by Goldman. And maybe they needed to bring back, David, the Chinese wall. Remember the Chinese wall where the analysts listened to the corporate finance? And I mean, that's what he needed. He needed to listen to corporate finance. They had to slip him the note saying, listen, going higher. No, the Chinese wall defeated this.
Right. Your point being, if you talk to the guys on the corporate finance side, you would have had a more bullish outlook.
Yes, because they priced these deals in 5 minutes.
And everybody would line up to buy.
But the analyst was so pure.
Yeah.
What a shame.
Welcome back. Shares of Tesla upgraded to a buy today. A new street high price target, $780 at Goldman Sachs. They see a shift towards EVs happening faster than expected. You wouldn't? What a shock. John Najarian, you own calls.
What a shock.
Can you believe that's the reason why they upgraded the stock, John?
Well, Scott, you'd be grasping for reasons at why they hadn't done it earlier, of course. But now this is a great move by Goldman. It's a recognition of what Elon Musk has actually done in terms of delivery. So I continue to own it. I own the upside calls, and it's just been a great ride. I don't intend on getting out of this one, Scott.
Yeah, I mean, look, they admit they missed it. This concern that we had about second half of 2020 growth slowdown was incorrect, they say. And since our downgrade, the stock is up 192%. All right.
$180 price target is a street high, as you guys have been pointing out. And just to put it in perspective, the average analyst target price currently monitored by analysts over at FactSet is $406. So just to give you an idea of just how much Tesla has run up. But take a look at some of the driving forces behind that Goldman upgrade. First of all, they're talking about the battery adoption side of things accelerating. That's a key point for that upgrade and that move to $780. Also, their energy and self-driving business, positive catalyst there. And a big key one there, margin expansion expected in the future as well. So that's the Goldman call on Tesla. It's not the only notable call we've seen. There have been a lot of bullish commentary coming out of these particular analysts, again, on Tesla. Adam Jonas, back on November 18th over at Morgan Stanley, said Tesla is on the verge of a profound model shift from selling cars to generating high-margin recurring software and services revenue. Overweight rating at Morgan Stanley. The next one, a little earlier on, Alexander Potter, over, again, Piper Sandler, on October 21st, after solid execution in the third quarter, Tesla still deserves a must-own status, so positive commentary there. And then to kind of round it out with something a little bit more negative, this is Rasvindra Gill over at Needham, basically on October 12th saying, we've never seen a stock rise that much, that fast, with such little regard to past fundamentals, if you're looking for a little bit of balance with regard to the views. Now, again, to start the year, Tesla was roughly a $75 billion company. Back here, $75 billion, and we just showed you near $550 billion market caps now. And just to put some of that in perspective, if you look at the biggest companies in the S&P 500, which Tesla will be at one point in just the next few weeks, You take a look at Apple, you take a look at, say, Microsoft, and you take a look at Amazon, those particular moves there, to put it in context, Apple 2.1 trillion, Microsoft 1.6 trillion, Amazon 1.6 trillion, Tesla would be roughly the number 6 stock in the S&P 500 if it were to go in today. So, Carl, an interesting look at that big Goldman call. There could be more upside ahead if anything happens here with some of these big calls, but still, caution abounds when it comes to a stock that's run that fast. Remember, Carl, $75 billion was the market value to end last year. $550 billion now. It's been a huge ride.